This is the trade I took for pound dollar on the 28th of August. This was around 10 a.m. New York time. So yeah, if you watch my pre-market analysis, you know that my high time frame bias has been bullish for a while. I want price to come into this buy side liquidity. However, we also have this monthly time frame fair value gaps 50%. This is the 50% level that price has been respecting, has closed above, and because it's the end of the month, we've got a few days left until the end of the month, and we've been hella bullish every single week this week. I expect some kind of a retracement, or I was expecting some kind of a retracement. So even though we are bullish, we've got bullish swings being made, higher highs being made. I was looking for longs, and this was a perfect point of interest on the 240 because we have a fair value gap below an order block. So that, for me, that is a much stronger point of interest than, say, if I was just trading at this small fair value gap, which is in premium, whereas this one right here is in discount, plus it is also in, we have two confluences: fair value gap, order block, higher highs being made, higher time frame confluence, order flow is bullish. So yeah, that's why I was taking a trade here. However, because we are at a monthly time frame fair value gap and we have displaced lower with these, with this fair value gap closing below this bullish fair value gap, I am reluctant, or I was reluctant in trading this all the way up to here, back up to the highs to make a new higher high. On the 60-minute time frame, price comes into that fair value gap, takes out that fair value gap, and puts in this candle pattern, a pin bar, followed by a bearish engulfing candle that cleared the lows of the fair value gap. For me, that is a good sign. I want to see, if I see something like that, I expect the next candle to be a bullish engulfing candle. And on the lower time frame, we start to fail to close below previous lows. If you look at this, we fail to close below that, and then we start to wick below these candles, and then after I see this bearish pin bar, I'm a bit more confident in the trade, and I enter the trade as at this level, and my targets were at these highs. As the trade started to play out, I took target 1 off at these highs because I don't really know the overall market direction right now. Although I am bullish, I still don't expect the price to take these highs out, so I'd rather get out at the first danger level, which is, to me, is that, and then I let the rest of the trade run. Ideally, I could have also traded at this pullback, but this level would have already been reached, and I took target 2 at these highs, I believe, or actually no, I took targets 2 at this level, this 50% mark of that monthly time frame fair value gap, which is also at this bearish fair value gap above this swing. So that's another, anytime in discount there is a fair value gap above or below a swing or order block, is normally a good point of interest, especially on the high time frames. Price normally tends to find some kind of a support or resistance at that level, and then price pushes up, and yeah, targets 2 were taken out there, and then I let the rest, I moved my stops to break even, and that break even was eventually hit because, like I said, I'm not sure if price was going to reach that high, and I didn't want to take target 1s at that high. So yeah, taking targets along the way was a much better decision than just letting the trade run up to that high. After that, we came down, took out this low above a fair value gap, and we've been holding that ever since. So ideally right now, I don't really have prediction. Maybe we'll hold this monthly time frame fair value gap 50%. It looks like we're forming a head and shoulder pattern, and maybe we'll come down and then go back up. But yeah, in terms of the trade, it was a good trade because of the point of interest it was at. 240 fair value gap below a order block in a trend, bullish trend. Just the opposite confluence was that we were respecting or rejecting the monthly time frames bearish fair value gap, and also that is coming to the end of the month in a very bullish month, so price was likely going to find some kind of a pullback, which it has. So yeah, I'm looking to see what price does next. In terms of entry, yeah, I think it was good entry. We start to clear the 240 fair value gap. We fail to close below these lows. On the 5 minute is what I was looking at, especially we consolidated, accumulation, and then we got this pattern, which is a pause candle followed by a sharp bearish candle, which price fails to go below. So you got to ask that question. Okay, so this candle is such a strong bearish candle. Why wasn't it followed by another bearish candle? Why didn't price go below this level? And why did price start to consolidate? Was it trying to pull back up? So yeah, after seeing this reaction and price failing to go below and holding this 50% and this low, I was quite confident to take a trade, at this level. So yeah, and in terms of targets, because I'm not 100% sure on the direction, much rather get out at a first level of danger and move my stops to break even. That way I feel a bit more relaxed with my trades. Had I just waited for price to reach these highs, there was a lot of movements going on, especially after seeing price reject this level with the pin bar. I might have panicked and taken the trade out straight away there. So yeah, I was much more happier taking targets one there and moving my stops to break even. And that's that for the trade. That was around 1.2% I got, I believe, overall in this trade. So yeah, happy with that.